Hello and welcome. So I found this video from Rayner Teo presenting a promising trading strategy with a winning rate of roughly 90%. The goal of this video is to backtest this strategy using Python. As a spoiler, I'm getting a lower winning rate but still a very high winning rate. That could be due to deviating calculation approaches and should not be understood in any case to prove Rayner Teo wrong or something like that. Instead, I'm very thankful for this interesting strategy and I'm looking forward to share this backtest with you. Before we are starting, very important, if you like this kind of content, be so kind, give me feedback by liking and subscribing to this channel. Thank you very much in advance. So let us quickly take a look at this strategy. Of course, I highly recommend to watch the video from Rayner Teo beforehand that you can better follow along. The strategy itself, or the technical implementation, is around 232. So we are considering the S&P 500 and we are defining the trend if the S&P 500, and that is the first condition, is above the 200-day moving average. If that is the case, then we are getting to the next condition, which is the 10-period RSI, which should be below 30. So we are buying the S&P 500 when two conditions are fulfilled. The S&P 500 is above the 200-day moving average and the 10-period RSI is below 30. If that is the case, we are buying on the next day's open. We are exiting or we are selling if the 10-period RSI is above 40 or after 10 trading days. And we are selling on the next day's open. So as you see, some things to consider here, so let's get into coding. So we are opening up a new notebook here and starting from scratch. The first step is to get price data for the S&P 500. For that I'm using yfinance. So I'm importing yfinance as yf here. So if you have not yet installed yfinance, you have to do that beforehand, so you are just typing in pip install yfinance beforehand. So in my case, as you see, the requirement is already satisfied, so I don't have to do that because I already installed it. So let's get rid of that. So we have imported yfinance here, and now we are getting price data for the S&P 500. We are using yf.download, then provide the ticker symbol of the S&P 500, which is head GSPC. So I know that by heart, but in case you are not sure, you can use the official yfinance website and just search for the asset. So I'm typing in S&P 500 here, and as you see, I'm getting the ticker symbol GSPC with a head beforehand. Okay, we got that. So we have to define a start date, and I'm just starting in 1969 here. And let's just start in January, and let's go until let's go until the beginning of this month. So we are just taking the 1st November here, right? So we are storing that in a data frame, which I'm just calling df, so that we can work with this data. So let's execute that. And as you see here, we are getting the information that the data has been downloaded. So let's take a look at the data by printing out the data frame. So as you see here, we are getting roughly 6,000 trading days in roughly 24 years. And now the next step is to calculate the 200-day moving average of the S&P 500. Therefore, we are taking the adjusted close price. So how can I calculate a 200-day moving average? I have functions for that in Pandas. So Pandas is a Python package, in case you don't know. And this data frame is from the Pandas module. So let's calculate the 200-day moving average by just defining a new column, df. And let's just call that MA200 for moving average 200. And now we are just rolling over this adjusted close column and take the mean of 200 days, so of the last 200 days. So how can we do that? By just using df, then take the adjusted close column, use the rolling function, define our window as 200 days, and just take the mean out of that. Okay, so let's execute that and print out the data frame to see what we got. And as you see here, we have a column containing the 200-day moving average values. As you see, we are getting NaN values here for the first 200 entries. We can just drop them by assigning df to df.dropNA and get rid of NaN entries. So let's take a look again. Now as you see here, we have the MA200 column without NaN values. Okay, to better understand the strategy, I would visualize the results until now. So therefore let us import the matplotlib library. This is just a visualization package, and we are plotting with plt.plot. We are taking the adjusted close column, adjusted close, and we are also plotting the moving average column, and we are showing this graph and execute that. And now you can pretty nicely see when the strategy's first condition, so the adjusted close price is above the moving average of the last 200 days, is fulfilled. So that is the case if this blue line here is above the orange line. Okay, but again, this is only the first condition. Okay, let's move ahead. So the next step would be to get the daily returns, so that we can see the change between two trading days. Luckily, Pandas has a function to do that for us, so I'm just creating a new column here and calling that price change. So we're just creating a new column again, price change, and define that as the df adjusted close and use the pct underscore change function for that. So let's execute that. Now we are getting annoying error messages, and I want to get rid of that. So I'm just inserting a cell here, and for that I'm importing pandas. So this is optional, you don't have to do that, but I think that is annoying for presentation. Import pandas as pd.options.mode.change assignment equals none. With that, I'm just turning off those error messages. So let's get rid of that here. So let's execute that again. And we don't have this error message anymore. So let's print out the data frame again. And again, we are getting a NaN value for the very first row. So we are dropping that df.drop NaN and execute that. Now to quickly summarize, we have added the 200-day moving average column to check for the very first condition. And we have also added the price change column, and we need this column to calculate the RSI, the relative strength index, the second condition, as you remember. I found a very nice step-by-step instruction to calculate this RSI, and we will stick to that. And the first step is to calculate up and down moves. And an up move is just the price change if it's positive, and 0 if the price change is negative or 0. So let's implement that. So we are creating a new column here, df, and we are just calling that up move and define that as, now we are taking the price change, and I'm using a lambda function for that. By the way, I can't explain concepts like the lambda function. I've covered that on my channel, so be kindly invited to check that out. But basically, we are just applying a function to every single value, to every row in this column. So to 6,000 rows, we are applying a certain function. And which function do we have? we are using the price change and apply a lambda function. And now I'm just applying what I just read. So I'm taking the value if the value is larger than 0. So as an example, this value is larger than 0, so we would get this value as the up move. Else, I'm taking a 0. Why? Because, as we've just read, 0 if the price change is negative or 0. Okay? So we have implemented that perfectly. So we can execute that, and we have defined our up move. Now let's define the down move. Let's get back to the link here. By the way, credits to macroption. I hope I pronounced that rightly. Great article, really. Very helpful, very straightforward. Shoutouts to macroption. And sorry if I'm pronouncing that wrongly. So the down move equals the absolute value of the price change if the price change is negative, and 0 if the price change is positive or 0. So let's implement that in Python. We are defining the f down move as, now same logic, we're using the price change column and apply a function to every single row with lambda. And now we are just taking the absolute value of x as described if x is smaller than 0, and else we are taking the 0. Perfect. We have defined both the up move and the down move. The next step is a bit tricky. That is averaging the up and down moves. You can go the easy way as explained here and just take the simple moving average, but I'm taking the wildest smoothing method here because I think Rayner Teo, or the system Rayner Teo was presenting, is using this method, as the inventor of the RSI is using this method. So we are using this one here. And now it's getting even more complicated because I'm using an exponential moving average formula to implement this method. And for that, you have to understand that the wildest smoothing method is the same as calculating the exponential moving average, but we have another alpha. And right now we have an n, so n is the number of periods, and Rayner Teo has defined that as 10. So if we are taking the wildest smoothing method, our alpha would be 1 divided by 10. Okay? Python has no function to use this wildest smoothing method, so I have to transfer this method to the exponential moving average. And how can I do so? If I know that the alpha is the only difference, and I know that the alpha is defined as 1 divided by n in the wildest smoothing method, and the alpha is defined as 2 divided by n plus 1 in the exponential moving average, I can say, okay, the n here is 10, so my alpha should be 1 divided by 10. So how large should my big N be here to get an alpha of 1 divided by 10? Well, I can just define this n as 19, because 19 plus 1 is 20, and 2 divided by 20 is 1 divided by 10. So I can just use the Python formula for the exponential moving average and take a span as 19. And with that, I can replicate this wider smoothing method. I hope I could explain that properly. In case I didn't, just drop me a comment. It's kind of hard to explain. So again, I'm using this wider smoothing method now, but I'm using an exponential moving average to do so. So let's do that. So let's define the f, and now let's just call that average up. And we are defining that as the f, take our up move, and we are using EWM for the exponential moving average, and define, as explained, the span as 19 to get the 10 period widest smoothing method here. So this is just taking the 10 period measurement, okay? And now I'm just taking the mean. With that, I've defined the average up move, okay? So let's execute that. And now the same for the average down move. So I'm taking the down move here. And again, take the exponential move average with a span of 19. Again, to replicate the wildest smoothing method. Execute that. And now I'm just cleaning up the NA values again. So we're just using .NA again. And print out this data frame. And now we have everything what we wanted to have. An average up column and an average down column using the wildest method. Okay? Now, the next step is calculating the relative strength. And now it's getting quite easy. Because we just use the average up divided by the average down and have to find our relative strength. Okay? So we can just do that by defining a new column here, df. We're just calling that rs. And we are taking, how did we call that? Average up, df, average up, divided by df, average down. Okay? So now we have to find our relative strength. Now let's check what we need to do now. And now we are calculating the relative strength index here. And the relative strength index is defined as 100 minus 100 divided by 1 plus this RS value which we just calculated. So let's go back and define a new column here, which we are just calling RSI. And now we are using a similar logic to above when applying this lambda function. So we want to apply this RSI function which we just saw, so this one here, to every single value, to every single RS value. So we can again use df, access the RS column, and just apply a lambda function. And this lambda function is just the definition of the RSI. So 100 minus 100 divided by x plus 1. And x is the RS value. Okay, so let's execute that. And here we are. We have defined the RSI value. We got everything what we need. Now let us take a look at the video again to remind us of our strategy. We only want to buy the S&P 500 if two conditions are fulfilled. The S&P is above the 200-day moving average and the 10-period RSI is below 30. We have those two values now. So let us define a locator finding those conditions in our data frame and create a column which is telling us if we should buy on that day. Therefore, we are defining df.log and take the first condition, which is df adjusted close is above the moving average, so MA 200. And our second condition is, and the RSI is smaller than 30. And what do we want to do? So we have to take parentheses here. And now what we want to do is to define buy here. So I've covered that on my channel as well. That is just using locator and operators in Pandas. So be kindly invited to check out my Pandas playlist here. So we have everything and we want to define that as yes. So I hope I got every parenthesis here. Let's execute that. Yeah, this seems to look good. And now you can define optionally a no, but you don't have to. But I'm doing that, so we are getting some practice here. So again, I'm using a locator, define our first condition, and let's just copy that. It's a bit faster here. So we are defining that as the moving average is above the adjusted close price, or, now it's an or operator, where it is here, or the RSI is larger than 30, we want to get a no here. Okay, so let's execute that and print out the data frame that you are seeing what we have done here. So now we got a column containing if we should buy the S&P on that date or not. Okay. Perfect. We have our buying points now. To calculate the profits and losses of those buys and subsequent sells, I'm using a loop. First, we are creating an empty list where we will append our profits or losses. So let's just call that P&L for profits and losses and define that as an empty list. Then we are looping through this whole data frame with for I in range, and we are just taking the length of this data frame. Now we are looking for the yes values in the buy column to find the buying dates by if yes in df buy, and we are taking an integer locator ilog to make it possible to go through every single row in the buy column and find those rows which contain a yes. So we are just taking the iterator here. Now we have to define an inner loop here to account for the selling conditions. Let us quickly switch to the video again. We should sell as soon as the RSI is getting over 40. If it is above 40, we should sell on the next day's open. If the RSI is not getting above 40 within the next 10 days, we should sell after 10 trading days and sell to the next day's open again. So let us implement that. To do so, we can define an inner loop here in the range 1 to 11, as we want to get from day 1 to day 10 from the buying point on. So we are defining for j in range 1 to 11 here. And in the next line, we are defining if the RSI is above 40. So we are using if, then access the RSI column, take the integer locator, and provide our iterator plus the j to account for the days after we have bought. And again, this is day 1 to 10. So if this is above 40, and now we want to append this profit and loss out of this trade to our empty list. So we're using P&L append, and now we need to define our buying price, and that is pretty straightforward. Our buying price is just the next day's open. So we can just use df open, take ilog, just define I plus 1 to get to the next day or to the next row. To calculate our profit now, we have to subtract this buying price from the selling price, right? And the selling price, if the RSI is above 40, is whenever that is happening, the next day is open. So we can use df open and take the ilog and take I plus j plus 1 to get the next day's open. Very important now, we have to break this loop. If we wouldn't do that, we would append wrong numbers, as the loop is still checking the next days even if we already appended the profit or loss. So we are breaking this loop. Now we also want to cover the case if the RSI is below 40 within the next 10 days. So let's incorporate that with the same logic as above. So we are using if df RSI ilog I plus j is below 40. We are again appending to our P&L, and well, the buying price logic isn't changed here, right? But the selling price is. So the selling price, if the RSI is below 40, is taking the next day's open after 10 trading days. So we are taking df open I log I plus 12. Why 12? We are buying at I plus 1, so this is our entry. If we would sell after 10 trading days, taking the next day's open, it would be I plus 12 in sum. So again, the logic of the buying price is the same as before, so we are just copying the syntax from above, taking I log I plus 1. As above, we have to break the loop once a profit or loss is appended to our P&L list. One small thing which I'm amending, which you don't necessarily have to, but you will get an error if you don't, is limiting the length, because we have a I plus 12 here, and in the end of this loop, this iteration would go into an empty space, so I'm just limiting the loop by 12 here. If you don't do that, you will get an error message, but that does not mean that this is not working. The other profits or losses will be appended to this list, so this is optional if you want to call it like this. So, okay, let's execute that and see what we got. So here are the profits or losses out of our trades, and the last step is pretty straightforward. We are just trying to find the positive and negative values here. So I'm using this comprehension to find them. You can use another approach if you want. So I'm just using I for I in P&L if the I is larger than 0. So I'm only getting the positive values in this list, and I'm taking the length out of that, and I'm getting 57 positive or successful trades, and I can just use the length of the P&L here for the total trades, and my winning rate would be this one here divided by, this one here. And as you see, we are getting a winning rate of insane 77%. I mean, that's awesome, right? Well, it is a bit lower than presented by Rayner Teo, but as said, that can be due to slight deviations in our approaches. I, for myself, will definitely explore the strategy more on portfolios and various assets and try to build a recommender system out of that. If you are interested in such topics, please let me know by liking, subscribing and commenting on this video. And that's it for now. I hope you had fun watching, or at least could extract value out of it. And I'm really looking forward to seeing you in the upcoming videos. Have a nice time. Bye bye.